What's up everyone, my name is Anthony, and in this video I'm going to do some technical analysis on the broader market indexes and then dive into some specific wave counts on the S&P 500 as well as the Nasdaq. So to start off, I want to look at the S&P 500, which is reflected here by SPY. So just to zoom out a little bit on price action that we've been seeing over the past couple of months or so, we have this wave 1 up, wave 2 down, wave 3 up, and then a complex correction forming this wave 4, and now working on this broader term wave 5. So within this wave, after we finished this wave 3, we had a complex correction forming, so a WXYXZ, and now we're working on the start of a new impulsive wave. And I want to point out that this move right here, so this clear impulsive structure, 1, 2, 3, 4, 5, starts a wave 1 in gold and yellow, and this forms another impulsive wave to the upside to fill out this wave 5 here. So the reason why I mentioned that this is impulsive, this is a really important point. As you can see here, this wave up was not impulsive, it was just an ABC, whereas this one actually moved in an impulsive structure. So this indicates that this wave, by nature of Elliott wave theory, has to either be a wave 1 or a wave A. And as you can see here, the reason why I mentioned the broader term wave counts is that a wave A doesn't really fit into this wave count as easily as you think. So if we have a wave A to the upside in a broader market index, especially in a bull market, it's not really going to look this impulsive, especially, so say you're in an uptrend, and you do have that wave A to the upside. I would really have trouble figuring out where you put that wave A to the upside in an uptrend. It's kind of hard to place that in there. That's why I prefer this wave count where you do have a wave 3 to the upside. This is a very clear wave 3, so 1, 2, 3, 4, 5. And now you have this complex correction wave 4. This is a very clear indicator for wave 4. So we need some push to the upside for a wave 5. And this looks like the clear start of that impulsive wave 5. So right now I'm leaning more towards that this is a wave 1 in gold and yellow, and now we're working on some kind of wave 2 correction. Now here's where the alternate counts start coming up. So there's some alternate counts where the first one is that the wave 2 ends here. So this would form a WXY structure where the W forms another WXY, so WXY forming a W, and then we come up for this failed impulse wave, as you can see here. If I get rid of some of these tools. So this is a failed impulse wave. And then we come down for another correction, so an ABC, and that forms your Y wave. So now there's another possibility if I draw it out here. So we could have a WXYXZ. So this I would say is a possibility, but I would not lean towards this count. The way we would indicate whether this count is valid versus this one, so if I get rid of this one, if we finish the wave 2 up here, this is the start of the wave 3, and I've marked this here as a wave 1 up. And now we need to look for this wave 2 down, and then we're pushing up for a wave 3, 4, 5. This would make more sense to me in terms of this count for gold and yellow, because this allows us to get closer to that bull market top by the summertime. So, and a clear indicator of whether we're in this count or not is whether we bounce off some of these technical zones. So I've marked them out right here. So these are the 23.6% retracements, 38.2%, 50, 61.8. So if we do bounce off some of these common zones right here, then we can expect to see some sort of bounce to the upside for the wave 3. And that would be a really good buying opportunity. But if we simply just fall through these zones, so say we come here and we kind of fall through them and we don't really get a strong bounce and we keep going down, then that is likely a possibility that we have this wave 2 ending here. And then we really look for a bounce upside to the wave 3 after this. But for now, I'm leaning more towards the fact that we have a wave 2 coming down, and we do see a bounce off these levels. First of all, if we do see some sort of retracement to the downside, so we go all the way down here, and we do get a bounce somewhere here, there is a very unlikely chance that we can actually come up to finish this wave count. So that's why I'm not leaning towards this wave count. Another reason why is when we compare it to the tech sector. So first of all, in the tech sector, we are seeing a very clear impulsive wave forming now. So wave 1, 2, 3, and we're working towards the targets I mentioned in the last video. So the 1.4 and 4, we're running right towards that. So the wave 3 upside, then wave 4, and then wave 5. So as you can see, there is very clear indication that there's bullish momentum left in the tech sector, and that would not really leave for this S&P 500 to kind of fall down all the way. If we do fall down to these levels, that would be almost more than a 3% drop. And if we, as you know, the tech sector is a major factor in the S&P 500. So if we're getting this huge drop in SPY, then we're going to also see a similar drop in the tech sector, and even more of a drop because, as you know, the tech sector is more volatile than the S&P 500. So you probably see like around a 6% drop, and this would not make any sense in terms of this wave count. And as you can see here, we've pretty much confirmed that this is a bullish impulse wave. So that's why I really like to prefer that we see a wave 2 bounce. Of course, I will take the alternate account if we do not see any bounce at these levels. So for now, I'm watching to see what happens as we do come down. And if we look at the price action that we've seen over the past couple of days or so, we see a very low volume grind to the upside, as you can see here. There's not really much impulsive nature as of now. It's kind of just forming a really interesting push to the upside. Right now, there's not enough sellers to actually trigger this sell-off, and that's why we see low volume. So right now, there's not much buyers in the market right now. Most of the upside is coming from gap up. So as you can see here, there's a gap up right here, lots of gap ups, another gap up, and then we kind of consolidate, maybe push a little bit higher. But overall, in the actual trading day, we don't really see that much upside. It's just lots of grinding upwards because of low volume. So once we do see sellers kick in, we can possibly see this wave 2 forming. And once we do see sellers kick in for this wave 2, I will be looking to see whether we can get a bounce at these levels. And that's a clear indication that we can start this wave 3 to the upside. And then we'll lead into this completion of this wave 3 in gold and yellow, and then finally finish off the bull market top and then come down for bear markets. So that's what my opinion is on the S&P 500. Overall, I'm still sticking to this wave count. I do see a possibility of retracing at these levels. So I marked this trend line in this upper trend line in white as just a reminder that this is where price action has bounced off previously, and we could see a push upwards to that area and then a push downwards for the wave 2. However, I want to also note that this retracement right here, so let me actually get rid of some of these levels and make it more clear. So if we take this area and we can see the 1.272 area at 428 is currently what we're rejecting off of, at least today in the trading day. And we can see some bearish wicks forming on that time frame as well. So as you can see here, there's some bearish wicks reacting to this level. And so we did kind of reject a little bit off of it, but this is not enough selling signals to confirm that we're in a wave 2, as we could keep gapping up and then pushing higher. So that's what the market likes doing right now, especially in the summertime, low volume, and that honestly sucks for trading puts. So that's why I'm not entering any more trades at this moment. I'm just waiting for a clear confirmation that we have enough sellers to enter this wave 2. And then we can see from there whether we have enough buyers to push up for that wave 3. So, and this is a 1.272. This is a very common level of just retracement. We've so far rejected a lot of the levels that we've seen here, but we've gapped up above them. So lots of these levels we just keep gapping up, even though we rejected in the trading day. And that's just an indication of low volume. So we'll see if that keeps happening for this level and for this trend line. So I'm going to look for that in the future. And overall, we'll keep you updated in Discord as well as here on the YouTube. So as for the triple Qs, it's a little bit more clear what's going on. We can see a wave 1, 2, 3 upwards, and then a wave 4 retracement, and then a wave 5 upwards. And right now in the tech sector, we're working on hitting these 1.4 and 4 retracement levels, as well as possibly the 1.618. But with the current count in SPY, I think we might hit some resistance at the 1.4 and 4, and that's why I marked it by the blue rectangle right here. So just a little bit more upside expected in the tech sector, and obviously this is on my watch list, especially for buying opportunities at the bottom of this wave 4. So as you can see here, as I mentioned in my past video, the tech sector is a little bit ahead in the S&P 500 in terms of wave counts, and that's why I also don't like to have price action stall much more here. So if we do take that WXYXZ count, that means we need a lot more price action before we can actually hit some kind of bull market top, and that will take a lot of time. If we stall another time for this move, huge move downwards, that wouldn't really play into this tech sector rally as well. And in addition, in a time sense, that means the tech sector is going to hit this wave 5 top much faster than the S&P 500. And while I do expect tech sector to hit the top of this bull market count faster than the S&P 500, I would not expect this to happen a lot sooner or a lot faster. So that would be like maybe a month or so faster. And the reason why, if we do have it last longer, then it's going to make it harder for the S&P 500 to kind of push upwards. So yeah, we would really expect to see a bounce at these levels for the wave 3 after we see some downside. So first of all, I'm just looking for this downside, and then we'll figure out what to do once we get to these levels around here. So that's just an update on the markets, and everything's looking good so far in the tech sector into the wave count. The only thing is a little bit hard to decipher what's going on in the S&P 500 as we keep gapping up above. previous technical levels, and we're just looking for that wave 2 still to the downside, and from there we'll figure out whether we can buy into calls for the wave 3 upwards or not. And in the future, we're still looking for this huge bull market reversal. It's not going to be a very huge crash, but we're going to start to see some negative price momentum flow into the markets when we do get around these technical levels, and that's going to be a good opportunity for puts. So that's still on the table, looking for that. And the real question is, what are we doing in the indexes in the meantime? So I've listed out some alternate counts, and overall we are expected to see some downside toward these levels in both of the counts. It's just a question of whether we bounce at these levels or not. So like I said, I'll keep you guys updated in the Discord as well as here in the YouTube. So that's going to be it for this video. Thank you so much for watching, and I'll see you in the next video.